All right. Hey guys, how you doing? Welcome back to Even I Could Trade. Today is January 4th, and we are looking down the barrel of some FOMC meeting minutes, as you can see right here. The market is doing very well today so far, as it is only 12 o'clock. But you can see right here, this is my little internals screen, and the market is up 42 points, which isn't bad. We just made a run up to this little swing high right here at 38.78, but it failed so far. But again, it's FOMC day, so anything could happen. As far as my trade, I did exit the rolled put spread that I put on yesterday for 37.50. Cleared that, and we are all zeroed out and flattened out right now. So we can see our profit is, or our account is sitting at 691, almost $700 from $500 in about 2 weeks. So I'd say that's pretty good. If we go back to our charts, I'll talk about the market a little bit, and you can see our tick has definitely been up all day, above zero for the most part all day. Our volume is definitely flowing into positive stocks at the moment, and our advanced decline line is above my personal target of 400. Out of the 500 positions in the S&P are positive right now. So very, very good, very positive in the internals. The only thing that kind of gives me pause is the VIX. The VIX is still a little bit elevated from previous days, but it is falling, but it's still higher than most other days from the last few days. So that's the only thing that kind of gives me pause, but I'm not surprised again because it's FOMC day. So the VIX is definitely counting in a lot of that uncertainty. So we're going to see how that announcement happens and what's going on with that. I think a lot of the positivity is coming from the jobs number. We had a pretty good job. Well, however you want to look at it, but the jobs number, the market seemed to like it. I'll say that. And prices, I think really this ISM manufacturing number being lower than forecast really kind of got the market going in a positive direction, because you can tie this to inflation, and that's what the Fed is kind of looking at from a rate action standpoint. So with prices falling, or at least manufacturing prices falling, that might lead the Fed to loosen up a little bit and help us out as far as these rate hikes go. I was listening to something earlier that was talking about the expected rate hikes, and it looks like we're expecting maybe 3 rate hikes through June, like quarter point rate hikes. So like a total of 0.775 over from now until June. So the more things kind of look like they're going to head in that direction, the better the market sentiment is probably going to be. So let's pop over here to our other screen, kind of take a look at the overall market and see from a couple different time frames. You always want to look at the market from a couple of different time frames so you can get context about really where we are and where we're sitting overall. So somebody made the comment yesterday that they were thinking that the market might retest the Corona lows, and I'm just not seeing that. Just not seeing that, folks. Here's a monthly chart, and your Corona low is down here. I mean, that's deep down. That's deep down. You'd have to have, I mean, more than a 2022 drop to test this low. And we might test, the Corona highs. Yeah, I could see that, getting below 3,500. I could see that. We're definitely in consolidation mode right now. But getting down to, the 2,500 level, I'm not seeing it. Maybe a dark 3,000. I could see that. But again, I don't have a crystal ball. But just looking at, all of this right here, we've already exhausted a lot of the bear action. And like I said, the Fed should start loosening up. We're getting better and better inflation numbers. That's what's running the market right now is inflation and the Fed, right? So if the Fed is starting to loosen, if the Fed is starting to see, good news, if inflation is starting to get wrangled, what is going to be the driver, the prime mover that moves us down into the 2000s? Because all, the layoffs, all of the job cuts, all of that stuff that would drive the market down is going to be driven by the action by the Fed, right? And we could even find ourselves in a situation later on in the year where the Fed cuts rates, because this is the fastest that the Fed has risen rates, like I think ever, so they might have uh, pulled up the rates too fast and see that later on once inflation is in check and say, hey, we can back off the rates a little bit. You could see that. So I'm just not seeing the driver that's going to pull us down to the dumps down here, right? But that's just me. Who knows? Whatever. We can look at our daily time frame, and again, here we go. This consolidation, this pennant area, this pennant flag. The market wants to stay inside that right now. You can see that right here. Bounce, 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 take off, right? Now, who knows what this FOMC is going to do? The FOMC minutes is going to do this. It could drop right back down here, but that's a long way to go. And it could do that. Absolutely could do that, but it's pretty far at this point. And like I said, we got some good price numbers with the manufacturing prices and everything like that. So who knows? And look at this. Look at this. I love this stuff. I love these freaking pivot points, man. It's just magical, right? You can also see some of this stuff with the Fibonacci's, but look at this rejection, bloop, right off that pivot point right there. Look at that, R1 smack. Now I could push through, could definitely push through. Like I said, the internals are looking really good. Everything's pretty bullish right now. But it's just crazy. It's just like right there, blip, smack. And we are, coming off of the stochastics right now. I really need to clean these stochastics up because these are too wide for me. I want them to be closer together. So I'm gonna go clean that up a little bit later. But that's where we're at right now. Our indicator, our internals indicator, is solid green right now. What trade am I thinking about doing today? It would definitely. It depends on what the FOMC does, right? So obviously we're going to let that play out. I'm going to let that settle for at least 30 minutes. At least 30 minutes before I consider doing anything off of after the FOMC minutes are released. Now, it's not a Jerome Powell giving a speech and answering questions type of day or anything like that. So it may not be as significant as one of those days. And I kind of know what they're going to say. I think, which is, inflation is starting to get under control, blah, blah, blah. So we're going to consider, whatever, just doing a quarter point or whatever. But I'm going to let that settle out for about 30 minutes. Then decide on a trade. I think it's possible to get in a good iron condor today. I think it is. But I haven't looked at the prices yet. Let's see what the expected move is looking like real quick. Ooh, low, hurry up. There we go. All right, so the expected move is looking at 28 points. So we really want to be about a little less than 40 points away from the market, at least as it is right now. This could change after the announcement. Because volatility might go up with that. but 40 points on a put, that would put us at 38.20s, about right here. So there's some, did I say that right? Yeah. So there's some juice down there right now. There's some juice down there right now. Let's see where that would put us from a chart standpoint. So 38.20. I don't really like that. I don't like that. I don't have any pivot points in my way. Is that really 40 points? Let me just make sure I'm not tripping, because I can't do math in my head. I cannot. Excuse me. Let's see. 7 minus 40. Yeah, 38.27. I don't know. I like to be 50 points plus away from the market, but half the day is gone. So theta's eating up a lot of our premium at this point. Let's see what that would be on the call side, because that might look better since we're so high already. Plus 40, 39.08. I like being above 3,900. Can we get a 39.10? Can we get a 39.10? 39. Yeah, we can get it easily. We can probably afford to get up to 39.25. 39 to, oh yeah, 39.20. I like 39.20, 25. Might be able to get a 39.20 because well, break this down a little bit. I usually like to do my trend lines and stuff on TradingView because it's a little bit cumbersome on Thinkorswim. Eh, we keep that trend line. I don't know. I have to see what it looks like. I have to see. I usually don't like trading this late in the day, period, just because it gets so close and stuff can happen, especially towards the end of the day. The volatility can really pick up. But, we'll see what happens. I'll take a look at it after FOMC. It's just too early to call. If I had to make a call, I'm selling a put right now just because of this support level right here. We can get close to it ish. 38.01. Let me see. And this 38. Yeah, I can get 3,800 at least right now. But it's too early to call. Too early to call. But that's what I'm thinking. That's kind of how I look at the charts to decide what I'm going to trade. I had a request to, say earlier kind of what I'm going to trade or what I'm looking at. So I'm going to try to incorporate more of that before I trade instead of saying, here's what I traded or something like that, and here's why. That's the thinking that I go into it with. So we'll see. I want to cut this video off because I don't want it to be too long yet, because I still want to add some stuff to the end. So we'll see you after FOMC. It is after market close, and here's where we ended up. I decided to kind of track my trades on TradingView. I think it looks a little bit nicer, a little bit easier to read. But this is where we ended up. So this is our roll from yesterday. We were at 37.50, closed that out very easily. The market went in our favor, thank goodness. So closed it out on this high right here, just to make room basically for the later trades that I might do today. FOMC announced at 2 o'clock, and the market kind of did its thing from there. It wasn't too crazy today, honestly, for a FOMC release. But it was kind of sideways to down a little bit. So I waited till a good hour, almost an hour after the release, just to kind of see what the range was going to look like. And we stayed within today's range. So I decided to go ahead and take another put. And I got in right here on this candle right here. And we'll zoom in so you can see it a little bit easier. I got a 37.95, I believe. I'll have to check, but I think it was a 37.95 or 3,800, something like that. On this candle right here, saw the stochastics going up, back up into range. So we had a stochastics cross. And we had the FOMC kind of shaking out, calming down a little bit. Still had some theta, a little bit of theta left in the market, so I was able to grab 20 cents for this trade. And right after that, this rarely ever happens to me, but caught a rally on the next bar, kind of really enshrining this trade. Could have closed it out if pattern day trader wasn't a worry, but caught this green bar. That was really nice. So on the other side of that, I was like, might as well take the other side of the market since it's range bound within the trading range for today. So I caught a call up here at 38.80. A few minutes later at 3:15 ish, something like that, on this candle right here. And again, caught another strong bar after that, cementing this trade. I think I put in the chat room that I used maybe 2 minutes later that the trade was at zero from 10 cents, which is, I mean, it's not that far, but it's kind of funny that the trade would be closed out basically in 2 minutes. So, but caught this bar and zeroed out this trade right here. Both sides ended up worthless. The market was still chopping around doing its FOMC thing, but it didn't matter for us because we had pretty good distance away and closed out another day. So here we are. Let's see if I can pull up. So here we are. Our results for today. Ignore this P&L for the day. This is leftovers from that box spread I did or something like that. Really, we made $30 on our trades today. You can see here 20 cents and 10 cents for those trades. And we also had a little residual from yesterday from closing out our put spread from yesterday as well. That's not reflected in the PL open because that trade is closed, so it's zeroed out. So that's actually another, I believe, $15 to add to the pile, the total pile. So you can see our total account size right now is $716.95. So pretty good. Tomorrow, let's see if we have anything on the calendar for tomorrow. Back over. There we go. Get our calendar up. And we've got our payroll. Payroll is going to be prior to market open. And we've got unemployment claims as well. Beyond that, only thing I see that could change anything is possibly crude oil inventories, but we're not really in an energy market right now. So just payroll and job market stuff tomorrow morning prior to the market open, really. And then Friday, we've got more payroll stuff and unemployment rate as well. And that's also prior to market open. This PMI number, that could be big. This is inflation, an inflation number. So we got to watch that Friday morning after the market open. But pretty good results so far. And we'll see what happens tomorrow. All right, guys, please like and subscribe the video. Please leave any comments if you have any questions about what I'm doing. You want to see me do something different, whatever the case may be. Please subscribe. And thank you for my latest subscribers. I really, really appreciate you following me and seeing what I have to say. I think it's valuable, but I'm humbled that you think it's worthy of listening to as well. I really do appreciate it. So just let me know what you got going on and let's keep trading.